What's going on, guys? Welcome back to the Andy Kandola Show. So today's video, we are gonna go ahead and discuss a topic that I basically built this channel on, and that's gonna be how and why I invest in dividend growth stocks. Now, this has been my strategy with this portfolio since I created this portfolio over a couple months now. Now, if you're new to this channel, my name is Andy. I basically created a bucket list portfolio that I go ahead and invest in by using dollar cost averaging, and I invest in stocks that are only purely focused on dividend and growth. Now, these stocks all pay out a dividend, as well as all these stocks have the potential to go ahead and grow over the next 10 to 20 years. Now, I'm not looking to go ahead and retire anytime soon. Basically, I want to go ahead and grow this portfolio so in 20 years from now, or maybe even 25 to 30 years from now, I can go ahead and retire and live off of the income, or have that income basically pay for all my expenses. Plus, I'm going to go ahead and share with you guys 3 practical examples here of 3 different stocks. One's going to be a growth stock, one's going to be a high dividend stock, and then one's going to be a dividend growth stock, and share with you guys which one seems to have the most profit and the difference between all 3 of them as far as this strategy goes. But now let's go ahead and jump right into the video. Now, in regards to my portfolio here, I call it my bucket list portfolio. Now guys, I use M1 Finance. You can basically trade stocks with any trading platform out there. In the past, I've used Webull, I've used Robinhood, I've used Public. There's a lot of different platforms. M1 Finance is basically the best platform that I found for a dividend growth investor because it keeps you very disciplined. You really can't trade anytime during the day. They have 2 trading windows every single day, which is going to be in the morning and as well as in the afternoon. So it is a good platform long-term for a long-term investor that's really focused around a certain type of strategy. Now, in my portfolio, this portfolio in just the last day here is up $413, and my current portfolio value is sitting at $48,332. And in the last day, I have earned $19.97 in dividends. So the nice thing with this portfolio is it is growing me dividends every single day, while I have my investments just earning me more income. Now, in the last week, the portfolio is up 2% or $964, and I've earned dividends of $22.62. In the last month, the portfolio is up 4% or $1,869, and I've earned $115 in dividends. In the last quarter, the portfolio is up 11% or $3,484. And then the portfolio's earned me a dividend of $293. And then if we just look at all time, the portfolio is up 13.72%, and I have earned $3,710. And in dividends, I have a total of $303 that I've earned. Now, I have broken this portfolio up into different sectors within the S&P 500. If you do want to get a glimpse of this portfolio, which I'm not going to get into all the stocks, I will leave a link down in the description. I like to be fully transparent, and hopefully this gives you guys some ideas of some of the different growth stocks that I've invested in. But now, in regards to this dividend income strategy, guys, I do want to go ahead and share with you guys some of the opportunities with this strategy. Now, if you are new to trading, basically within the stock market, there's a couple different ways that you can go ahead and trade. You can go ahead and day trade, which is basically buying and selling a stock on a particular day and not holding a stock usually longer than overnight, and that's usually traded on different technical charts. There's also growth investing. Growth investing is just buying into stocks that are purely growth, meaning that they'll basically grow over time, but they don't pay out a dividend. And then additionally, there's passive income investing, which is basically purely dividend-based stocks that are basically earning you income on a month-to-month basis that you can basically live off of or retire early and have them cover your expenses. And then there's the 4th strategy that I'm using, which is going to be dividend growth stocks. Now, the nice thing with dividend growth stocks is that they basically are a fusion of a couple of these different strategies. You're earning income because you're still focused on dividend stocks. These might not be the stocks that pay out the highest in dividends, but they're still earning you money. And additionally, you're also focused on growth because at the same time, these stocks are reinvesting the money that they're making off of their revenues. So when these companies go ahead and reinvest their money, they are growing at the same time. So that's why these companies are all going to be dividend growth stocks. Now, usually with these type of stocks, they're usually a little bit safer because these companies are well established. Now, additionally, why I really love this strategy is because when you're focused on dividend growth stocks, you don't really tend to care about the actual market price of that particular stock. So for example, when we're looking at a particular stock, a lot of times when you want to go ahead and trade a stock, you're looking at that particular stock's stock price. Now, when the stock price goes up, obviously you make money. But let's just say that you invested in a stock today at $10. And if the market price of that stock tomorrow drops to $8, you're going to feel pretty bummed because you wanted to go ahead and make money and you wanted the stock to go ahead and go up, but at the end of the day the stock price went down and now you're losing money. So when do you go ahead and sell out of that stock? So with this type of strategy, we don't look at the actual market price of a stock, we go ahead and look at the actual income that the stock's going to go ahead and generate us, plus we go ahead and look at the overall 5-year and 10-year growth of that particular company. So the strategy does keep you very disciplined. And additionally, with the strategy, guys, I go ahead and focus on dollar cost averaging. By dollar cost averaging, no matter if the stock price goes up or down, I'm in it for the long haul. I'm looking at investing a certain amount every single day into the stock market or every single week into the stock market. And because I have a long-term time horizon, it doesn't matter to me what happens today or tomorrow. And because I use this type of strategy, it keeps all the emotions out. And I can tell you guys, just trading in the stock market for over 15 years now, it is extremely important to go ahead and keep the emotions out of investing and just sticking with a strategy. Plus, the other reason why I really like investing in dividend growth stocks is because of the power of compound interest. Now, as we get into the example here, I'll share with you guys the reason why dividend growth stocks work out with the effect of compound interest much better than growth stocks or high dividend stocks. And then lastly, guys, the biggest and overall reason why I like this strategy is because you're basically making money in two different ways. You're making money by the dividends going up and by reinvesting your money with compound interest, and at the same time, because the stock price should go up, and usually within the stock market, stocks usually tend to go up around 8 to 12% based on historical data. So the growth is also there, so that's how you're making money in two different ways with this strategy. And now let's go ahead and jump into the examples here. We're gonna go ahead and look at 3 different examples. Now the first example that I want to go ahead and share with you guys is gonna be a purely dividend focused investment strategy here. This would be if you're investing in a stock like an at&t that's paying out a pretty high dividend. The dividend yield is actually 7.03%, but the potential growth of this company is really not that high. If we just look over the last 5 years, this company has actually lost around 14% as far as the share price goes. If we look at the last 10 years, the company's up about 14%. So this would be considered like a passive income strategy where you're focused on just the overall income. Now, just to show you guys the overall returns with this strategy, we're going to go ahead and look at a dividends calculator. Now, in regards to the dividends calculator, this is going to be a nice way to go ahead and look at the overall growth. Now, I will put a link down in the description if you guys want to go ahead and use this calculator yourself to go ahead and determine the overall returns. Now, this is something, guys, that I'm very excited to go ahead and share with you guys because this is basically an enlightenment that I came across while investing. This is something that I was never taught. This is something that I learned just by doing different examples. But when you guys see this, I believe you are gonna be amazed. So if we look at at&t, let's go ahead and fill this out. Now, at&t is gonna be a stock that's currently trading at right around $29 per share. If we look at their overall returns, they're around 10%. If we look at the overall dividends of this stock, the stock's dividend is 7.03%, and their growth rate is around 2% a year. So now, just jumping into this calculator, what I'm gonna do, just to keep it very simple, overall for all 3 of these examples, we're going to go ahead and say that we're going to be buying 1 share of that stock. And because nowadays we can do fractional shares, we're going to go ahead and say that we're investing $10 into that stock, and we're not going to go ahead and invest any more in that stock after we go ahead and invest $10. So just choosing the type of options here, number of shares, it's going to be 1 share. The annual dividend yield in this case for AT&T is 7.03%. Is it going to be a taxable account? Yes or no? We're going to go ahead and say it is not going to be a taxable account, because basically I'm going to go ahead and look at investing in this for the long term and until retirement. And a nice way to go ahead and invest in a non-taxable account would be a Roth IRA, for example. With a Roth IRA, guys, if you're not familiar with that, let me know in the comments below. I can go ahead and make a video around that, but that's basically one of the best ways to go ahead and invest and not pay any taxes on your stock earnings. So anything you earn in that stock, as long as you go ahead and hold that until retirement, you do not have to pay taxes on any of the earnings. So it's one of the best ways to actually invest. Now additionally, we're going to go ahead and say that we're investing $10. With fractional shares, you can buy a stock for $1 or $10. So we're going to go ahead and say that we're actually investing $10 in AT&T. Now as far as the annual dividends increase, as we just seen, the annual dividends increase is around 2%. So we're going to go ahead and say 2% is how much the stock's dividends are increasing every single year. And as far as the distribution, because the dividends are paid on a quarterly basis, we'll go ahead and choose that. Now for all three of these examples, guys, we're going to go ahead and say that we're investing nothing else in the stock, that we're just going to be investing $10, and we're basically just going to leave that $10 in there for 30 years. Now additionally, if we look at the annual share price appreciation, let's just jump back to AT&T and see how much it's appreciated and how much the stocks and the share price appreciated in the last 1, 5, and 10 years. So if you look at the last 1 year, it's actually down 13% as far as the overall returns of the share price. If you look at the last 5 years, it's down around 15%. If we look at the last 10 years, it's up about 14%. Now I'm going to go ahead and say on average that I believe in the next 20 to 30 years that the stock price is going to give us a return of an average of 5%. So I'm going to go ahead and put in here 5% is going to be my expected average return over the next 30 years. And just completing the next thing here is going to be DRIP. Now DRIP is if we're going to go ahead and reinvest all our dividends right back into the stock, and we're going to go ahead and choose yes. And as far as the dividend tax rate, we're going to go ahead and choose 0 there, because this is going to be in a Roth IRA, which is a non-taxable account as long as we hold it to retirement. And then lastly, guys, this is going to be investing in this type of passive income strategy and in AT&T for 30 years. So let's go ahead and calculate and see how much we'll have in 30 years. Now if we just scroll down here, after 30 years, the ending balance that we'll have is $636 by investing just $10. So our $10 is going to give us a return of 6,263%, or an average annual return of 208%. In total, we'll go ahead and have roughly $20 in dividends, or an annual dividend income of $85 in 30 years from now. So that's definitely not bad if we look at the overall return of just investing $10 today and having that be a return of over 6,000%. Now, I want to go ahead and share with you guys the next option here, which is going to be by investing in a high growth stock, but a stock that does not pay out any dividends. So for this example, I'm going to go ahead and use Google. Now Google's parent company is Alphabet, and obviously I'm sure we're all familiar with Google because YouTube is owned by Google. Now in reference to Google, if we go ahead and look at their year-to-date returns, Google's actually up 10% year-to-date, which is extremely solid. I mean, this is a great growth stock. In 1 year, they're up about 21%, and in 5 years, they're up about 137%. So Google is a high growth stock, but it's a stock that does not pay out a dividend. If we look at their dividend rate, they do not pay out a dividend. So this is going to be using a growth investment strategy. But with this strategy, there's basically no dividend reinvestments. Now let's go ahead and plug this into our calculator. Now we're going to go ahead and say on average over the next, let's say 30 years, I'm expecting the stock to go ahead and give me an estimated return of, let's just go on the high side and let's just say 25%, because that's extremely high. I mean, if we just look at the last 1 year, Google's return is around 21.89%. But let's just say that Google keeps making the right types of investment and the revenue just keeps skyrocketing. So let's go ahead and jump back into the calculator. So we are going to be basically doing the same thing here. As far as the number of shares is going to be 1 share, we're going to go ahead and invest $10 in Google with fractional shares. Now, because Google does not pay out an annual dividend, we're going to go ahead and change the annual dividend to 0. It is going to be a non-taxable account. We're going to invest $10. And then as far as the expected annual dividend increase, that's going to be 0 because Google does not pay out a dividend again. As far as the distribution, we're just going to leave that. We're not going to be investing any more money, so we're purely just going to be investing $10 over the next 30 years. But right here, the expected annual share price appreciation, we're going to go ahead and go aggressive and say that Google is going to go ahead and increase their share price by 25% every single year. Now, everything else is going to be kept the same because we're just investing in this for the long term. And let's go ahead and now calculate this. And if we just scroll down here, once we calculate this, this is crazy. So now with this type of strategy, if we invest $10 in Google in 30 years from now, we will have a return of $8,077.94. That's an over 80,000% return over the next 30 years. And that would be an annual return of 2,689%. Now, because we're not getting any dividends from this, the dividends are going to be 0. Basically, guys, the reason why this is going up is because we're expecting the return of 25% every single year. And by expecting that type of return, we're expecting that the stock price is just going to keep climbing higher and higher. So guys, I mean, that really shows you that by investing early and just by investing today, as opposed to waiting till tomorrow or till next week or next month or next year, just by investing $10 today and leaving it in there, this is the type of return that you can get by investing in a growth type of strategy. But now, guys, the final type of investment strategy, and the investment strategy that I use and I preach, is going to be dividend growth stocks and dividend growth investing. And for this example, we're going to go ahead and choose a very popular stock that we all are probably extremely familiar with, and that's going to be Apple. Now, Apple is a stock that does pay out a dividend, as well as they are a growth stock as well. So this company does go ahead and give you dividends as being a shareholder of the company, as well as they also are a growth company because their stock is just growing at such a high pace. And usually within the tech sector, a lot of these stocks don't usually pay out a dividend, but the stocks that do pay out a dividend are still focused on growth. But now, just looking at Apple here, Apple's current trading price is $425. This stock has actually gone extremely high since they announced that they're going to have a 1/4 split in their stock price in the next couple months here. That's going to be, I think, happening around August. And then additionally, Apple's earnings in this last quarter were just ridiculous. I mean, they had 40% higher earnings than what was expected. So in regards to Apple, if we look at their overall 1-year return, they've grown by 100% in the last year. Just year to date, they've grown by over 45%. And then if we look at the overall 5 years, they've grown by 250%. And now just looking overall 10 years, they've grown by over 1,000%. Now, I am going to go a little bit more conservative than the 1,000% return over 10 years. So we're going to go ahead and say that by average returns, they're going to go ahead and grow by 25% on average every single year. So over 10 years, they would actually grow by 250% as opposed to 1,000%. Just in case Apple is not able to grow by that same level, I'd rather just be conservative. Now, in regards to the actual dividends that Apple does pay out as well, Apple's dividends are at 0.77%. So they're paying a dividend. It's not that high of a dividend because this is a dividend growth stock. And that's what usually happens with dividend growth stocks, is they still do pay out a dividend. So you can go ahead and by reinvesting that dividend, have that compound interest effect. Now, additionally, they are growing at an average of 10.49%. So we'll go ahead and use that number as far as the actual dividend growth rate. And lastly, guys, I just want to share this as well, is Apple actually started paying out their dividends 7 years ago. So they've actually been growing their dividend dividends for the last 7 years. But now let's go ahead and jump into that dividend calculator so we can go ahead and pull these numbers, and I can share with you guys why I'm really excited about the strategy and why I believe this is the best strategy to invest in the stock market. Now, we're going to go ahead and keep some of the information the same here. We're going to be investing in one share, and we're going to be using fractional shares. So we're going to go ahead and say that we invest with fractional shares and buy $10 in Apple stock. Now, as far as the annual dividend yield goes, that was at 0.77%. So we're going to go ahead and use that as an annual dividend yield. It's not going to be in a taxable account. It's going to be in a retirement account like a Roth IRA. As far as the expected annual dividend return, that was 10.49%. So we're going to go ahead and just use that number and say that Apple's going to go ahead and increase their dividends by that average rate. Apple does pay out a dividend on a quarterly basis, so we'll stick with that. We're not going to invest anything else. It's just purely going to be $10 today that we're going to keep in there for 30 years. And as far as the annual share price appreciation, because Apple's grown by over 1,000%, I'm just going to be conservative, and we're going to say that they will go ahead and grow their dividends 25% per year. We're going to go ahead and reinvest that money that we're going ahead and collecting from the dividends, as well as the growth of the stock. And then lastly, we're going to go ahead and stick with a 30-year investment. But let's go ahead and see what this gets us. Now, if we just scroll down here, this is what I am talking about. Look at that number. Okay, in 30 years from now, we are going to have $24,506. Now, if we compare that to even Google, by investing in this type of dividend growth strategy, we're still making 4 times the returns that we made in Google. Now, guys, why I'm so excited about this type of strategy and sharing the strategy with you guys is because guess what we invested? We invested $10. That's all we invested. $10. I put $10 into Apple stock today. This is how much I can have just by having $10 invested in the stock over 30 years. I would have $24,506. I mean, this is nuts. Like, this is crazy. This would be a return of over 244,000%. And as we compare this to the other strategies of focusing on growth stocks or focusing on dividend stocks like an at&t or like a Google, this type of return is just nuts. That's why I personally love this strategy. Additionally, if we look here, as far as the annual dividends, in 30 years from now, let's just say we keep the money in here, we would have an annual dividend of $4,000 roughly just by investing $10. That's crazy, because every single year, if I just leave my money in the stock market, I can still get $4,000 in annual dividends. And I can go ahead and basically leave the money for my kids if I just want that money to just keep growing. But my dividends, I can go ahead and spend that money and pay for all my expenses. This is all by just investing $10. And overall, in the last 30 years, we would have seen a dividend of $7,298 in total. So if we just look at the bottom of this, guys, as we can tell, the compound interest effect really shows very clearly here. And this is basically why Warren Buffett says that compound interest should be the 8th wonder of the world, because with compound interest, you're just investing $10 today, and because you're reinvesting all those dividends and then you're leaving the money in there to go ahead and grow over time, that compound interest effect really shows. So guys, this is the power of investing in high dividend growth stocks. So hopefully this excites you guys as much as it excites me, because I mean, just this is crazy. I mean, look at this number. Like, this is $10 invested. I was lost for words when I basically did this calculator and I looked at the different strategies of investing in the stock market. So guys, hopefully this was extremely useful here. I hope it was. All I ask in return for sharing all this valuable information, and hopefully you guys enjoyed this, is if you don't mind just crushing that like button, as it really helps motivate me to go ahead and share with you guys different strategies out there, as well as my personal input in regards to investing in the stock market. But that's basically gonna be everything that I have, guys, in regards to this video. So until next time, guys, I will see you guys at the next one.